This is Lecture 10.3, Recording Transactions Using a General Journal. This is found on page 285 of your book. We need to talk about what sales returns and allowances are. A credit memorandum is shown here for the return of or an allowance of some sales. So first of all, most merchandising businesses expect to have some merchandise returned. A customer may have received the wrong item or damaged goods. A customer may return merchandise for a credit on their account or a cash refund. Credit allowed a customer for the sales price of returned merchandise, which results in a decrease in the vendor's accounts receivable, is called a sales return. Credit may be granted to a customer without requiring the return of merchandise. Credit also may be given to the customer for part of the sale price that is not returned, resulting in the decreasing in the vendor's accounts receivable, called a sales allowance. So sometimes they bring the merchandise back and we give them a sales return. Sometimes they don't bring the merchandise back. Maybe it's damaged and we don't want it anyway, and it's called a sale allowance. Okay, these are all shown in what is called a credit memorandum. So you can see here's our credit memorandum 41. It's got the date, who it's to, the account number, what the item number was, the description, the price, the sales tax, and the total. So we are sending this to them saying, we are going to credit you back $62.01. If the above is incorrect, please return stating the difference. So please make sure that you let us know if we're not doing this right. But this is the number that we're going to put in our books, because this is what we think you have called and told us is not correct, or you need to return. So on March 11th, we granted credit to Village Crafts for merchandise return $58.50 plus the sales tax $351 for a total of $62.01. We're going to write the date, our sales returns and allowances, credit memorandum 41. We're going to write the amount of the sale, $58.50, write the amount of the sales tax payable, $351. Then we're going to write our accounts to be credited, our accounts receivable to Village Craft of $62.01. So remember, these are different than normal. You know, generally our payables are going to be credited and our receivables are going to be debited. We've already done that. We've already done a credit for our sales tax payable. We've already debited our accounts receivable for a larger amount of money, but now we're saying they're going to return that, so we need to put money back into that account. Okay, or we need to take money out because we're no longer waiting for accounts receivable of $62.01, so we need to credit that. These are your terms to review for the chapter.